Hey, universe and mining family. Grab your shovels and your pickaxes. Welcome to the show. I'm Nemesis, and of course, I'm not your babysitter. Do your own research, but let's dig in. Bitcoin is the world's best performing asset class over the past 10 years, says Pompolino. That's positive news, I'll take it. I mean, good performing assets tend to, after 10 years, tend to do at least perform good for another 10 years. So if it goes 10 years performing good, it'll do 20 years. And if it goes 20 years without declining, then it should do 40 years without declining. At least that's the fundamental theory behind it. But let's see what they got to say on this. Crypto industry investor Anthony Pompolino says Bitcoin will likely fall to 85% below its all-time highs to around $3,000. Pompolino gave his forecast during an interview on that CNBC's Squawk Box yesterday. Not that I really watched the fake news outlets, because I don't believe in news brought to you by somebody else's political agenda. So they're not really giving biased news anymore, in my opinion. But again, that's just my opinion. But for what he was saying with this 85%, some people believe that it depends on who you're looking at, what metrics you're going by, what data sets you've collected into putting into your what you're thinking Bitcoin is going to drop down to through your data sets. But some people are saying 85%, which would put it to being right around $3,000 being the bottom, which means we're at the bottom. Is it now time to start buying as much as you can possibly get? Or some other people are thinking 95% retracement, which, you're pushing into the 2000s and the $1,000 range. I mean, if it goes under $1,000, I will try to absolutely sell everything that's not nailed down in my house to get more Bitcoin. Mark my words, because, yeah, that would be insane. That would be something that I will never see again in my lifetime, I believe. The partner at crypto investment firm Morgan Creek Digital Asset argued that while Bitcoin was overvalued last year, with the selling pressure this year subsequently driving its price downward, there are several important factors related to the asset's long-term value that are important to remember. First, Bitcoin is the most secure transactional settlement layer in the world. Hell yeah! So it's got to be worth something. I agree. It's the best performing asset class over the past 10 years. It has outperformed the S&P, Dow Jones, and NASDAQ, etc., during the long bull run. Wow. Experienced two 85% drops during that time, and it's still up over 400% in the last 2 years. So if you rewind time 2 years ago, if you bought Bitcoin 2 years ago, you're up. Think about that. So if you bought it 2 years ago, watch it pump, watch it come back down. You bought it 2 years ago. You're still way up. I am absolutely jealous if you bought it 2 years ago. Keep hodling on. You guys rock if you bought it 2 years ago. I'm jealous. I hope that Bitcoin gets back down so that I get the chance to do what you guys did a couple of years ago. That would be so cool. Third, he added, all of Bitcoin's price action in the past years has been driven by retail investors. Yes. Ahead of meaningful involvement from major institutional players, such those now poised to enter the crypto space next year. Big players include Fidelity, New York Stock Exchange operator, and Intercontinental Exchange, ICE. That'd be really cool to know that they are getting in next year, but I don't know, it's like I don't have any inside tips, so I don't know anybody that works there that says, yeah, we've got some people. They might already have people who work for the firm those firms and already are invested in, which would be really cool. Then hopefully those people that are invested in, that are dealing with these people, spread that knowledge around. Pompliano argued that the recent washout on the crypto market is a barometer of retail investor patterns throughout its retail-driven history. In 2017, the cryptocurrency traded as a highly volatile speculative asset. By contrast, he continued, more recent institutional involvement in primarily conducted via less transparent over-the-counter OTC trades, where trends are not immediately apparent and harder to gain insight into. Pompliano was lastly asked about dwindling profit margins for cryptocurrency miners. I'm not worried about it. I have not overextended myself. You should never grow bigger than what you can afford. It's just common sense. As the asset value tumbles, he conceded that outside regions with abundant low-cost power such as China, where he claimed miners can mint Bitcoin for as little as $2,000 to $2,500, we are seeing a similar washout of miners in areas where electricity costs pushed expenses closer to $6,000 or $6,500. These later, he said, are underwater now. And those ones that are also in the later portion, they also have, if they were brand new facilities, they've still got loans that they've got to pay for. They've got building that they have to pay the mortgage on still. And the market bottomed out on them. It's going to wash out everybody that is in that position as a miner. As previously reported, Morgan Creek Digital Asset is backed by the institutional investment house Morgan Creek Capital, which has a $1.5 billion assets under management. The firm launched a digital asset index fund in late August, which gives accredited investors indirect exposure to Bitcoin, Ethereum, and 8 other large market cap assets, although not pre-mined cryptos such as that Ripple, Nipple, Stellar, and probably a few others that they're not divulging who, because these are institutional investors that are used to hoarding knowledge, so they don't want to let you know what they're into unless you're willing to pay for it, because that's the old technology, is you hoard it, and that hoarded knowledge is now valuable, and if you want to see a peek of it, you better pay. Speaking yesterday, but of course, but going back to that whole, hoarding that knowledge, that's where that Yizzy Yen would actually solve some issues, making things a little bit more transparent on a platform. And then speaking yesterday, Vinny Leham, CEO of identity management startup Civic, predicted Bitcoin would trade a range bound between $3,000 and $5,000 for at least 3 to 6 months. If the coin falls to then break higher, it could lose the $3,000 support as well. Bitcoin is currently trading at around 3,700 whenever they wrote this, blah, 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 blah. But I kind of think that we're setting up to drop a little bit more. I think the big drop that we just had is gonna relax a little bit, cool off, and then it's gonna duff down a little bit more. How far that next dive is gonna be, I'm hoping that it brings us, between $1,000, $2,000. That's where I would hope. It'll give me a better point to buy in, and it'll wean out some more miners off of the networks, allowing me to get more per hash power that I'm going to get. So all around, this is actually some positive news. I mean, you have some people that are calling for the absolute bottom. If it is, cool. You know, we're about to shoot up for Christmas, and that's awesome. Everybody's gonna have a good Christmas and a happy New Year. Otherwise, it's gonna come down a little bit more. Everybody's gonna get all sad and dramatic about it, but they're not gonna look at the bigger play, which means that you're gonna be able to dollar cost average, which I keep preaching to everybody, dollar cost average, DCA, and as the market comes down incrementally, or the market goes up incrementally, you're gonna watch your dollar either go further or not so far. As long as you're dollar cost averaging, don't worry about it. Where the price action really is. If you believe in this technology, just do your normal dollar cost averaging. You will be fine on the other end. You know, as the market comes down, your dollars are going to go further. But that's just the way that I look at it. And then I also look at it as my mining equipment is also earning more, while my cat back there is trying to get up on that shelf with all that nice, cool equipment up there. I can kind of see him like struggling getting on the shelf. He's like, I want to check it all out. We have stuff on my shelf. Yes, if you can't tell, that is his shelf. We put carpet on that shelf so that he can climb on it and all that good stuff. That's his. So I'm kind of invading his territory by putting some mining equipment up there. And then I've got the little box for my my CPU of my actual computer. But while you're, it's like, let me know what you guys think on this. Where do you think the price action is going to stop at? Do you think we're at the bottom? You think we're going to go up from here? Or do you think we're going to go down a little bit further? I mean, if I had to take, an uneducated guess, and I mean just a completely uneducated guess, I'd say $1,700. If I'm right, cool. If I'm wrong, I don't care. I'm gonna still continue to just dollar cost average. If it hits $1,000, I'm gonna be like ecstatic. I'm gonna buy as much as I can with whatever money I've got. But what do you guys think? Where do you think the bottom is? Drop a comment in down below. And while you're down there dropping in a comment, smash that like button, hit the subscribe, and the notification bell. And with that, of course, I will see you on the next one.